of the things that have been doing amazingly well because of more spending and deterioration of the dollar and stuff like that in fiat currencies is Bitcoin. But there's an interesting article surfacing. I've got emailed probably about 20 times now from lots of people of how, it's titled The Big Short Inside Crypto's Doomsday Machine. And it has a lot to do with Tether and how, I think it's like 70% of Bitcoin is bought somehow, through Tether. And a lot of it's done on Binance, the exchanges that aren't in the US. And there's a reason why Coinbase doesn't accept Tether and they have their own stable coin. And, you're seeing like a 3-4% decline in Bitcoin today. I wouldn't be surprised. The fact that this is making its rounds through the crypto atmosphere and everything, the fact that, I'm looking at crypto and, we're talking about these altcoins or utility tokens. I mean, probably 500-600 that I've analyzed, more than 90% are complete bullshit and are corrupt. You don't know the numbers. You don't know what's going on. There's a reason why they're not in the U.S. They're, they don't give you an equity stake. They're only trading on these exchanges where you have to, buy Bitcoin through Coinbase, transfer it to Binance, and then transfer and be able to buy something else on another exchange. This way, nobody is able to keep track of it. But it is a detailed article, guys, and it's definitely worth a read because it challenges out because no one thinks Bitcoin will ever decline. And, this person, Crypto Anonymous, right? It's a very, very good article to the point where they touch up on a lot of points with Tether. And after you read it, it makes you, it makes you think of, I don't know if that's going to result in Bitcoin coming down. But for me, as someone who's bullish on Bitcoin and owns it and made a lot of money off of it so far, if I sold out today, I want to see the bearish case. I want to know what could derail this at all times, right? That's what I want to do. A lot of people they just want to listen to the bulls and high five each other. But, this Bitcoin thing, I know you read it too, right?
I didn't read the whole thing, but it is interesting. I've seen several different things over the course of the last year or two pop up about Tether, and I've gone down those rabbit trails a little bit. I don't, my brain doesn't work that way. I'm not in the detail or in the weeds on that. So I don't want to make claims about something I don't know. But it is interesting. I'll keep reading about it. And I'll try to make a note and talk about it next week if I'm on with Bitcoin, because there's a podcast coming out and I saw it through one of the many channels I check. And they were talking about, it's funny because you sent me that this morning. And yesterday I saw the link or something that caught my eye about, hey, honest question, this Tether thing's confusing. I don't want a bull or bear. I want common sense. And they were going to do a podcast. And I made a note to check that again. I thought, wow, that's awesome. So it's kind of funny. I wonder if they're going to mention the article you're talking about with Tether, because it's a great detailed article and it makes a hell of a lot of sense. What the end result will be, I don't know. But, it's pulling back right now. So now's the time to take a victory lap if you're him.
Listen, it was a good enough article for me to mention because I never want to, just, give you BS stuff. But I mean, it's a well thought out, detailed, not just some guy like shorting it one pager. No, it's definitely worth a read to really, to see what's going on. But guys, remember, man, those altcoins, a lot of them, I mean, you don't know how much cash they have. A lot of these guys kept their money in Ethereum when they raised it in 2017, which crashed from 1,200 to, 100 something. And, these guys basically had no money. I know, because some of these guys were reaching out to me saying, hey, if you want to fund us again, I'm like, you just raised like $12 million. Yeah. I'm like, what happened to it? It's 6 months later. How do you go to $12 million, without even having your business up and running or a business, this is what we're going to do. And a lot of them haven't done any of that yet. I mean, those tokens are only as valuable as the utility function of how you could use that token on that site to buy. And they have no utilities tokens. So there's no value. You don't get an equity stake. Someone comes over and buys these things for billions of dollars or buys a company for billions of dollars. You don't make that money. It's not like, you own a stock and it gets taken over and you get that. No, you don't own an equity stake. You get zero. So it's just interesting, that story. Definitely, guys. It's called the Big Short. You can find it Inside Crypto's Doomsday Machine. Again, I'm not promoting anything. I like when I see a good read. It was a good read, something that just challenges the status quo, which, I always like to hear. So I want to talk about earnings because we had two companies report. I mean, Goldman Sachs. Yeah. Goldman Sachs. Everybody hates that company. It's kind of like Tom Brady. Everybody hates him, but you kind of want to be him.
Yeah.
It's like,
I love him. I mean, I'm kind of that weirdo that, they're the perfect example for me in looking at the world and saying, hey, here's how it is. You can choose whether to make money on it or not. Not that it was an absolute sure thing, but the odds were so much in our favor. And for CRA members, I do a lot of the updates. Goldman Sachs going forward, the update's going to be, they blew it out of the park. I'm tired of talking about it. We're making a lot of money. Good job buying it. Because They put up silly numbers, and it should continue, and I think it will. And they do it in the line of paying billions in fines, and nobody gets in trouble. And it's just a revolving door. I mean, they are. What I tell you, Frank, I read it was off of Zero Hedge, but I'm not sure if the Tyler what's his name? Shit. Tyler Durden. Yeah.
Fight Club.
I'm not sure if he coined it or if it was a reference to somebody else, but he was like, Goldman Sachs is the best privately backed hedge fund by the taxpayers. And, there's a little bit of truth in every good joke. I mean, that's what they are.
Yeah. I mean, they take advantage of the system, right? I mean, it's, first of all, when you work at the SEC, you work government organizations, as you move up and you become great, you're going to max out your salary at 150 maybe if you're lucky. And then, these people know everyone and then what do they do? That, Goldman Sachs, JP Morgan, they hire these people and they have massive connections. They know how much the fines are going to be. They know it's such an inside group there, and you could hate it and hold up a sign, but you look at a company trading at 10 times forward earnings. The earnings were supposed to come in on the consensus estimate was $7 and change. It came in 12. Did the same thing last quarter. I said they're going to continue to blow out the numbers. It's a company that benefits from more liquidity, more volatility. Those are conditions that are either going to get accelerated next year. And this Goldman has to stop trading as a bank at 10 times forward earnings, 1.2 times book, because they're growing much, much faster on a revenue basis, 25% annually expected to grow, and 35% on earnings, which is much faster than all the FANG stocks, which trade at 30 times forward earnings. So maybe it doesn't go to 30 times earnings, but I can see it going to, the market multiple is 21 times. I mean, you look at Goldman and you see that $300 and you're like, what?
Yeah.
And we're up 40%. It's cheaper now.
And the massive run up. I mean, heck, it's up from 200 to 300 basically since November.
Just to put this in perspective, Goldman could double and go to 600 and still be trading at a discount to the overall market.
Yeah.
That's how cheap it is right now. And you're not looking at, hey, they sold a business or they just, they're engulfed. Every one of their, let me bring this up really quick because I show this in a video. And again, I like doing this for the YouTube crew who's watching this. And this is from Credit Suisse. You're looking at these numbers, $12.08, consensus at 714, but equity trading, investment banking, asset management, all these well ahead of forecast. They're right in the middle of this growth. And then when you look at, the massive growth here of 8.7 generating revenue of, this is just last quarter, but just 8.7 to 10.8, you're looking at these earnings are incredible, right? 35% earnings growth, 10 times forward earnings they're trading at. You got to be kidding me with everything just, they're in the perfect situation. They put themselves in a perfect situation. They're making money. I know you hate them, but you're also getting a 1.6% yield by owning them. I just think it's, and then we have Netflix, right? Netflix came out and I would like to say they blew out the numbers, but they didn't. But yet the stock is up 14% on news that, hey, we're probably not going to issue any more debt to pay for our new content, which is their business model. And people love that. And plus they added a lot more subscribers. I know you looked at that quarter too with Netflix, right? Yeah,
and I'm an easy middle of the road guy on Netflix. I wish I would have bought it and made a bunch of money. I didn't, so I missed that boat. I'm not a big TV guy. I'm not a big streaming guy. I'm not a big what do you call them, series, and all that kind of stuff. But the thing that stuck out to me was it's amazing how they're going to be cash flow positive to fund themselves, and they're going to basically balance or keep 10 to 15 billion in gross debt. And just basically keep refinancing and all that. That is an amazing, that is a huge light bulb for me because it's a cool story in my opinion, how you have a ton of haters, how you took on massive debt. The only reason you could do that is given the environment of low interest rates and the ability for people to need money, to put money somewhere to buy this debt. So could Netflix have grown into Netflix if interest rates were 7%, Frank? Maybe, maybe not though,
no,
right?
No.
Because you're not going to get that kind of money, be able to return that, blah, blah, blah.
Absolutely not.
So it's an amazing picture of where we are in the environment, where interest rates are, but then it's an amazing success story in execution because now you've used that environment and now you can balance this debt and your cash flow is positive. That is awesome to me when you tell me crazy stories about how much it costs to make one of these series and all this stuff. Frank's a series guy. He knows, he's a good Netflix guy.
Well, when I look at Netflix, I see Disney going up, on Netflix news. There's a lot of things that you need to understand with Netflix, which I love. Why Netflix could double from here. It could be $1,000 stock, I think. Because one is, if you're being priced, which Disney is being priced on the amount of subscribers you add, and it doesn't matter what you pay for them, Netflix is going to $1,000. Okay, because that's the business now. Because when businesses take over companies, it's not so much you're taking over, hey, I like this business model. They're buying people. I mean, you look at Google and Fitbit, they're buying their file, they're buying people, they're buying emails, right? This way they have access to that to throw them in their system, track them, predict the future on them, and sell them advertisement. That's the world we live in. And yeah, that's why Disney is getting that premium, right? Which, again, as you know, I've been wrong on. They're short it. But listen, valuation doesn't matter. But if you look at Disney, guys, the average, so whatever they have, 85 million, 90, whatever they have, their average revenue per user, which should be a big deal, right? That's how much, each subscriber is it's $4. It's like $4.50, right? And it's going down. You know why it's going down? Because they said for Verizon, you get our service for free. So they're just signing up subscribers and saying, giving it away for free. And Netflix last quarter missed those. They only added 2 million subscribers. That was lower than estimates and whatever. But when I look at Disney and I just signed up for Verizon, I got that free Disney Plus, and because I have the unlimited plan, the family plan, they said, it's not for a year. They extended it. They said, no, you got it forever. I said, what do you mean? This forever. You never have to pay for it ever. I was
forever.
Like, think about that for a minute. You never have to pay. Imagine you bought a service and you didn't have to pay for it forever. What are they going to, so what they say, right? If you don't know, what the service, what the price, it means you're the price. So what are they going to do with my name? Man, it's going to be broadcast to the whole entire world on everything that I do, right? So, that credit to Disney, but Disney at $4.50 average revenue percent. The thing I loved about Netflix is they added 8 million, right? And they actually increased their margins, increased their revenue. They're getting $13 and something, so 21.25.
Yeah, more than double for Disney. Yeah, it's amazing.
I mean, it's not that you're just adding subscribers. You're adding subscribers that are paying, that you're able to charge more, where we don't know if Disney has pricing power yet. They said they're going to raise prices, but when you give something away for free, listen, most of the time, people don't pay for it. They don't want to pay for it. You get about 10, 15% of your file, and that's our business, right? You give away things for free, show them what you're about, and then you hopefully they'll subscribe to our newsletters and stuff. But it's going to be interesting to see how this is. And just to put things in perspective here too with Disney, when you're looking at that debt number, Disney's loaded with debt, and you're looking at COVID, Daniel, right? So we look at COVID and you say, companies are getting back to normal. The markets surpassed, right? We're at all-time highs. You're seeing a lot of companies generate, more revenue and more earnings. Disney's earnings are not going to get back to pre-COVID levels for another 3-4 years, because that's how much they're impacted by everything. And as
hell, is their park in California open yet?
Yeah, I believe they just
finally
opened.
Okay,
I think so. It might, know what? It might not be open. I don't know. I know they would just, in here, I think it's still 25, maybe 35% here.
Okay.
But I'm trying.
Sorry. Anyway, they're not getting back to earnings pre-COVID for another 3 years.
So we have all kinds of systems we can bring this stuff up really quick. But let me show you guys. When you're looking at earnings for 2020, $2.02. But even if you go back like to 1870 and what this company generated pre-COVID, I mean, these guys are really not going to get back to those earnings of, what was it, $5.77 in 2019. You're looking at 2023, maybe 2023 before they get back to that. And then if you look at their balance sheet too and how much debt they have, I mean, you got to spend money on content. You look at Netflix spending $17 billion on new content. That's why people subscribe to Netflix. Netflix is great because of new content. You don't go on there and watch a lot of old stuff. Some people do, but most don't. And that costs a fortune to lock up some of these actors and actresses and get that content. And they don't have the money that Netflix is going to spend, but it is going to be interesting. And again, everything negative I say about Disney, take it with a grain of salt, because every time I feel like, wow, they're really falling behind, the stock goes higher because nobody cares. And I never want to be one of those people, Daniel, where like the Tesla bears, where even pre-split, right, it was 1,500 to whatever, and then they're like, 200, 300, 400, 500. Terrible, it's a fraud, and now, it's one of the largest companies in the world where, you accept it and that's it. I'm not going to tell you to short Disney. I lost money shorting Disney, a lot of money. So,
some stocks just get your name and your timing's a little off, and it just, it's aggravating. But that's as Hyman Roth said in was it Godfather 2? This is the profession we've chosen. So it's going to be crazy.